This new rating by the London-based agency on Uganda has raised eyebrows, but has not come as a surprise. According to experts looking at the ballooning date and previous warnings by the International Monetary Fund, the World Bank, economists, observers, and now the International Growth Center.
Trying to manage the amount of money that they're spending on interest will be very important going forward, and trying to work with external investors to bring in money into the country. And of course, branding is important. The reputation of Uganda internationally is something that has been of concern lately. So I think working on trying to amend some ties with the international community will be important to bringing in more money, bringing in more business to the country.
But the head of the Public-Private Partnership Department of the Ministry of Finance admits the negative signals out of this rating, but says government has been woke to the debt question.
But by and large, we're cutting down on those. Secondly, there's a realignment of the National Development Plan, as well as spending, cost centers, as well as the program approach to budgeting. Now, those put together, going forward, you're going to see a completely different approach in the next, the fourth National Development Plan, but also going to see a clearer focus to production side of the economy, as opposed to what we've been spending resources to. Now, the question is that something that you're saying is going to help us in the current circumstances? No, of course, these ratings send a wrong signal to investors. It's going to be difficult to get people, the assessment, the risk, is higher. Deciding to invest in Uganda as opposed to any other place, we now are completely going on a completely different level of assessment. They're going to be a lot more careful. But we also believe that Uganda has inherently its uniqueness that has made us resilient.
According to Moody's, the authors of the ratings, the structure of Uganda's debt, and I quote, has become less favorable over the past years, an assertion this financial analyst concurs with, saying Uganda could have already breached the 50% debt to GDP threshold.
In my own view, we are at 54%. My own calculation, we are standing at about 54%. So really, for me, we are on the edge for a sovereign debt crisis in this country. It is time for policymakers to do a reality check and really attack these things with a very sober mind, because we cannot continue burying our heads in the sand, so to speak. When you look at what this implies, the implication of this downgrade, you can look at it through 3 or 4 parameters. One, it affects borrowing costs of government. So if government was going to contract a loan today, there will be a few basis points for the risk that any lender will be taking. So it becomes expensive for government to go to the markets.
According to the recent Ministry of Finance figures, as of December 2023, total public debt rose 93.3 trillion shillings and has aged up 13.6% on account of acquisition of commercial loans for budget support and costs associated with increased domestic borrowing. Marco Musime, NTV Tonight, Business.